And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. Welcome to my podcast. Thank you for joining me today. Well, I have an interesting story. Nobody ever tells the truth. When I say nobody, I'm talking about the jibber jabbers on TV. They never tell the truth about what's going on in the market or in the economy. So everybody has been chasing, of course, AI, the big tech stocks. People made money, but they got to know when to get out. And I'm going to tell you exactly when the stock market crashes. And it's in 25 years, it's never failed. Every time we got the signal for it to crash, it would crash. But first, let's talk about what's going on with the economy, something you probably never heard. AI, okay, and GDP, economic growth. Now, it's unbelievable. Think about it. Nobody is talking about it. They don't want you to know this. That 75% of all our growth, all our GDP growth, in the first quarter came from one thing only. Guess what it is? AI spending. Now, there's a real problem with AI spending now, and why the market's in deep trouble, because the whole market depends on AI, depends on 12 stocks. In fact, 4 of 12 stocks are really holding up the entire stock market. Now, so 75% of all our growth in the first quarter came from AI spending. Now, you're going to start seeing that spending just drop like a rock, because the 2-year Treasury yield is going up. And that is the worst thing that can happen to tech, the 2-year Treasury yield. Because we always think of the 10-year, of course, as mortgage rates. We always think of the Fed, when they increase the rate to the banks increase the rate to you on your credit card, your automobile loan, and so forth. But nobody ever talks about the 2-year Treasury. That does the same thing as when the Fed raises the rate to the banks, but then the banks pass it along to you. It hits all the same sectors, but worse. So the AI spending, not the consumer, not housing. Housing is over. Are you kidding me? I mean, housing 2 months in a row is just falling apart. Too expensive. Manufacturing, everyone's talking about what great manufacturing we have in the United States. We're bringing manufacturing back to the United States. You're not going to ever get manufacturing back to the United States. It's never going to happen. Not unless you decide to get rid of all the unions, and the unions decide to get rid of all the pension funds and pension plans for people and insurance. That's crazy. But AI spending, now just AI alone. Now the consumer barely spent at all. Housing is what dragged down our economic growth. Housing always drives our economic growth. Always. Companies, talk about these AI companies, went on a massive shopping spree. Here we go again, data centers. It's all we hear about, data centers, chips, and that's why 4 of the stocks we've been in for a long time, okay, are up huge for us. Those are the 4, there's only 4 companies that make the machine that makes the chips that Micron buys, of course, and Intel and so forth. But companies went on this massive shopping spree, and software, research and development, they went nuts. That alone was the entire economy. Think about that. That alone was the entire economy. And the biggest part of all of that is four stocks. Four stocks. Those are the stocks that make the chip machines. Makes the machines that makes the chips. So think about when they say all this money, all our GDP first quarter only grew for one reason. It's because of four stocks. If something happens to those four stocks, the market's going to crash like big time. But there's a signal we're going to talk about that you'll never get hurt if you follow this specific crash signal. This has never been wrong. So the whole economy is sitting on a one-legged stool. Nobody talks about it. Nobody cares. All they do is AI, AI, AI. So the government, okay, has no choice but to backstop when this big bubble pops, and it's going to pop. Now, yesterday, if you remember, the yields eased. The 2-year, 10-year started to go down, started to drop. Now that's good news for tech. They like low yields. Bad news for banks. They like high yields. So, but the only reason yields went down is because oil collapsed, and for the wrong reasons. If oil was down under $70, because there's such great demand, because our economy is growing, our economy is really hot, that'd be great. But no, that's not what's going on with our economy. All we do is, again, we have AI. That's it. That's all we do, AI. So the 10-year dropped about 8.9 basis points. The 2-year dropped 5.4 basis points. I mean, it was tanking. Now, the 2-year gave a big boost when that 2-year dropped, because remember, the 2-year is all about expenses, anything you spend money on. When that drops, leisure stocks go crazy. And I had my gang in leisure stocks for quite a while. We call them our 30%ers. And the 2-year gave all the leisure stocks a big rebound. Do you remember the other day we had this big pullback? Remember everything collapsed? I think that was, I forget what day it was. Maybe Willie remembers. But we had this big pullback. And I told everybody, don't get out of leisure. Don't get out of leisure. These are our 30% stocks. And they're doing really great. Don't get out of leisure. And I also said, don't get out of the 4 machine makers, the machines that are built to make chips. Because both of those, if you follow the money and not the noise, you always got to follow the money. It leaves a footprint, and it showed the trend. We're still tremendous, even though we had that one day. I forgot what day it was. I don't know if Willie remembers. But let's see. We had that big, big drop on that. I think that started on, I think it was June 22nd, if I'm right. Now, was it June 22nd, Will? So, 23rd. So, when that dropped, and if you go look at any of the leisure stocks, they dropped pretty big. And I said, don't get out of those leisure stocks, and don't get out of our ASML, LRCX, AMAT, and clack. I said, don't get out of those. They're all going to go back up. In fact, if you look at those four right now, the four biggest AI, or that group of AI stocks, four that makes the machines that make the chips, they're ready to break. They're getting ready to almost break out. Because remember, we got the 2-year coming. You got to watch that 2-year. If that 2-year keeps going down and down and down, these chip stocks are going to break out. But we also had in those four stocks a great footprint. The trend was showing us. The trend was up. Great footprint. I said, don't get out of these stocks. They're going to go back up because look at the footprint. All you have to do is look at the footprint of any stock, and you know when the market drops and your stock's dropping, if your footprint is healthy, your trend is healthy, it means money's still going in. We did the same thing with our leisure stocks. And take a look at those. They had that one-day drop. They had that one-day drop, one day. And they all came back. Every one of them, all came back. So, now, the biggest problem is, again, no one will understand when these crashes occur. So there's a couple of sectors that are doing well right now that's holding up the whole market. Everybody's running into leisure stocks. A little late. We've been in those leisure stocks for about, 2 months now, a little late. But you can go in them if you want. So the leisure stocks, everybody's hiding in. And matter of fact, everybody's coming out of tech is running into the leisure stocks. So, but I still like very much the four stocks that represent the machine making that makes these chips, because the trend has been tremendous. But let me give you a warning signal that almost nobody follows. It's so accurate, it's scary. It's when the 3-year Treasury drops below the 2-year Treasury. When that drops below the 2-year Treasury, that's an amazing signal. In the past 25 years, it's never been wrong predicting a crash or even a correction, big correction. Never been wrong. 0 false alarms. So let's go through it. Take year 2000. That 3-year broke underneath the 2-year, boom, the dot-com crash followed. Right away. 2007, it happened again. The 2007 boom, the financial crisis, the housing crisis. Everybody could buy a house, right? No money down. And as soon as that 3-year broke through that 2-year, went underneath it, we had a crash. 2019, COVID, the big recession. Now, same thing happened. As soon as that 3-year passed underneath the 2-year, we had a crash. And then in 2022, same thing, broke again. Never have they been wrong. Never. 4 for 4 in the last 25 years. 4 for 4. Not wrong. So you got to watch the signal. You got to watch it. So again, in 2022, it broke again, and the market dropped 25%. While tech fell 35 to 70%. 4 for 4 every time, right on. So it's so accurate. So that's what you got to follow. So the bottom line is this. We only have a handful of stocks that are holding the market up. Start watching your 2-year Treasury and your 4-year Treasury. That will tell you which way your stocks are going to go. There's also another thing that tells you if your stocks are going to crash. It's accurate as hell. IWM, the small mid-cap stocks. When that breaks, but the S&P doesn't break, and the NASDAQ doesn't break, but IWM goes down, that's telling you, that's a warning. Always correct. Never wrong. So if you watch IWM, you want to see that turn red. You want to watch, again, your yields, the 2-year, 10-year, never wrong. And then you want to watch that 3-year going underneath the 2-year, never wrong. So when they keep asking you, what do you think the market's going to do? What do you think? Someone asks you, what do you think the market's going to do? You say, well, I know exactly what it's going to do, and I know exactly when the stock is going to crash, and I'm going to be short. And when this market does crash, and it will crash, just like those other 4 markets I just gave you crash, you've got to learn how to be short. Wall Street doesn't want you to know how to be short. They scare you to death. Don't short, don't short. We'll teach you how to short. Phil's Gang. Check us out. It's free for 10 days. You've got to learn how to sell short and how to read the market. That's what we do every day. See you on the charts.
Are you nuts?